Hello.
Ami, it's good to be with you.
Hi. Hi, everyone. So we're going to have an interesting discussion. I've already had a couple of discussions with Pat in the past, and I promise it's going to be very interesting. Why don't we start with an introduction? Tell us a little bit about yourself and the company.
Sure. Inveniam is an operating system for data. My own background, I worked at Raymond James and Bear Stearns. I managed tech portfolios in the 90s at Bayer, which was good because everything went up, so I looked smarter than I am. I left and started my own investment bank, ran that for about 14 years. I sold that and was CIO for a university, which is less fun than it sounds. And so I left and started Inveniam, and we were very much focused on overregulation in banking that we thought was going to decentralize historical banking functions to fintech. And we thought non-bank lending, think this is 14, non-bank lending was going to explode. And we said, okay, how do we get in the front of that and make markets there? And we didn't think that the markets would form around geography or regulation, but around technology. And we were focused on specifically physical settlement assets settling digitally. And we said we thought the markets would form around those technologies. And I had a team in Asia and a team in Europe, and I led the team in the US. And we were introduced to blockchain in early 2015. We made 6 investments around that. And then in 2016, I proposed to my LPs that we make a large investment, kind of an all or none bet on blockchain, because I thought it was going to be completely transformational to private markets. And they didn't want to, so I bought them all out and I started Inveniam. And Inveniam is a mechanism to deliver data real time to a financial instrument. So your financial instrument has the ability to surveil data without the need for a centralized data lake, but actually looking directly into the systems of record for those real assets. So you have the ability, instead of getting data from a servicer or getting data from a third party, but you're actually looking real time into the operating systems, and it's really flipping data on its head, right? You're no longer creating copies of data for the ease of the user, but rather organizing all the users around the data. So there's a single leaf on the tree that everybody's looking at, and everybody knows this is the canonical golden copy, and you're extracting data and delivering that to the computational element just in time. So Inveniam is an operating system for data that powers digitization that will eventually power all tokenization, but right now it's just digitization. Does that make sense? That was a really long intro. I'm sorry.
That's a good segue to what we do at Ownera. I'll be much shorter.
I'm sorry.
My background, less important.
I'm sorry, let me redo this. Ami, it's great to have you. Tell us your background. I'm failing in my job. Sorry about that.
Thank you. So I think the relevant background to here was that a few years ago I did the world's first tokenization for a VC fund before tokenization existed. So we tried it, we built it, we know what works, what doesn't work, and that was very, very early days. And I've been pulled into this space and have been working in it ever since, investing, starting companies. And Ownera is a company that I founded because I realized that everybody here in the room are going to be working on tokenization platforms, on tokenized assets and so on. But the problem is that a lot of them are just siloed and are not easy to connect to other platforms. So instead of getting one global market that is digital and liquid and distributed, we're getting a lot of silos because it's very hard to tokenize and every company is doing it differently. So what we're doing is we're deploying a network, which you can think of like a cloud over here that everybody in the room can reach up and connect to. And you can publish your asset into it, and you can gather assets that are published and present it to your clients, and effectively it allows everybody to trade with everybody. Now, back to you, because all this trading capability is meaningless unless we can actually show the data. Because unlike crypto, which is really easy to trade, right? Bitcoin doesn't have an issuer, doesn't have information, doesn't publish reports, doesn't have dividends. But when you talk about securities, especially private securities, data is hard to come by, and without it, tokenization is going to be, kind of limited. And we actually believe that when you tokenize and you bring asset digitized to the market, the data has to be better than what was available before tokenization in a manual world where people were, sending PDFs. So what sort of data are you capturing in what types of asset classes? And what did the end user actually get to see, the investor get to see at the end of the line?
Thank you. And I'm gonna hit that question in a minute, but I wanna come back to what you said a minute ago about aggregating liquidity across silos, because this is very important in an ecosystem. The ability to aggregate liquidity across silos geographically, jurisdictionally, but also silos that are created by commercial enterprises is something that decentralization at its core is about, right? And you're solving that problem of aggregating this liquidity across silos in order to get trades cleared, right? And this brings liquidity to parts of the financial market that have historically been preyed upon by large pools of capital that can buy them at very low multiples, bring them out of their jurisdiction or their niche, and then trade them at a much higher multiple, right? So what this is doing is it's creating mechanisms for liquidity to these smaller players, right? So I want to say Ownera is doing amazing things.
Thank you. Back to the question about data.
So what we do is we are collecting, we are the pipes for data about a real asset that you need to understand the state of an asset, so you can value the asset, so you can value the capital stack, so you can trade the capital stack. And we're focused on data-rich, low-frequency trading assets, right? Infrastructure, real estate, private equity, anything for which there's a large asset into which entropy plays a real role in the value of that asset. So if you had a real estate asset, FTX has come up a couple times, right? And FTX was your key tenant, your building is less valuable today than it was 2 weeks ago, right? And the ability to understand the performance of that asset based on live data feeds, looking at the data in the system of record where the data sits at rest, creates huge opportunities. And one of the things that we're doing is we're giving people a mechanism to instrument specific pieces of data in their own data system and delivering it to a computational system on demand. And this might be anything from rent roll, it might be anything from foot traffic, it might be anything from a computerized maintenance and management system. I just was giving to Montserrat earlier today an example of a semiconductor chip manufacturer. And we know nothing about semiconductor chip manufacturers, but they were using our system in order to be valued. And the valuation expert wanted a real-time view into their computerized maintenance and management system so they could see how often they changed the filter on the clean room, because there's a one-to-one relationship between changing of the filter and throughput of chips. And so they wanted to do that. And this is an example where Inveniam is giving Houlihan Lokey and auto-populating directly into their valuation model information from a computerized maintenance and management system. And what we're doing is we're creating workflows around specific pieces of data that we're delivering into computational tools, Argus, ValueD, Cascade, InvestTran, or the predominant tool, Excel, right, that is used to value those assets so that we can then give them to somebody like a valuation or an administrator so they can then set the value of an NAV and then from there set the value of a closed-end or interval fund.
So you described the factory. I can tell the other side. We're working on a project with one of the banks and LRC Group, which is bringing real estate to the market. And for the real estate, institutional real estate project, typically they will send their potential investor, a very small set of potential investor, PDFs and other pieces of data and Excel sheets and so on. But together with Inveniam, we're able to create a whole data room where all the data is available. Always, it's tethered to the internet, so they know that the data is real, It goes down to the details of the tenants and the actual deeds and all the information, and it even has an AI component that will basically read through the whole thing and allow you to look at a summary and jump straight to the right page. So taking data and making it dramatically better than what it is today through tokenization is an important thing. And
it's huge, and I'm going to give an institutional example, and then let's go to another small one or individual one like LRC. But the Oregon pension plan, about 3 weeks ago, I was talking to their CIO. They have 51% of their portfolio in alts. On average, he has 150 days of latency for data on his portfolio. On that 51%. His ability to do risk assessment on his portfolio on any major market move for the public side is instantaneous. On the alts, it's non-existent. He, as an LP, wants the ability to have real-time visibility into a portfolio with third-party marks, not a mark by the GP, which we think is coming. That'll be like a 40-act fund clearing and settling their own trades, right? A GP setting up the marks on their own assets will be inconceivable, we think, in a few years. But really, where he's doing that, and there's a third-party market, and he can see that data. For LRC, and specifically with that, what we want to be able to do is feed that data real-time, powering the Argus upload, powering the waterfall, powering the capital calls or distributions, everything that you need where it's auditable, clickable, and instrumented. And what we're doing is really we're the middleware taking out 10-finger automation between systems.
So I think both these kind of systems, the tokenization itself is a way of creating a market, pricing, ability to participate in primary, secondary, borrowing money, is very compatible with the industry that you're building, which is getting the information that is required for all of these assets. So I think every asset is tokenized, is almost like a candidate to be getting that sort of information that you have, but it goes the other way around as well. Every asset that you provide all the information to is immediately a candidate for tokenization right out of the bat. So can you give me some numbers? How much, what volume of assets do you have now as, already in your data rooms, and how much are you building? What's your velocity right now?
Sure. So, we tokenized we believe the first global debt instrument on chain between third parties in February of 18, right? We did about $100 million of trades in 18. We realized the transaction side was too difficult to monetize. We wanted to then, we were modeling those as data, not as code. And we said we have to be able to begin to onboard these assets. So we did about 30 million in 19. In 20, we did, I would say September of 21, we had 700 million of assets on our platform. And that's when Apex came in as our Series A lead. Since then, we've grown. Right now, we have 67 billion on our platform, and we're adding about 50 assets a week are being onboarded, where people are looking to get observable inputs to sophisticated models with in-period comps. And if they can do that with the data streaming, a level 3 real estate asset can move to a level 2. Level 3 is an illiquid asset, level 2 is a marketable alternative. That movement is transformational to the market. It changes your capital treatment, it changes your accounting treatment, your reserves, it impacts your tier 2 capital, it impacts your reserves if you're an insurance company of how much you need to reserve against it. If you're an insurance company, you can hold a real estate asset on Schedule A instead of Schedule BA. And all of these people are doing it for better data, better risk management, automated calculation. But what they're also doing is future-proofing their data so they have good accounting treatment. And then at that point, they're a candidate for tokenization.
So it is more effective balance sheet management as well. But so what percentage of those billions that you put data on do you think is suitable for tokenization?
100%. 100%. We have 2 clients who have both told either their board or they've publicly stated that they're moving just over $1 trillion of their assets onto our platform over a 3 to 5 year period. And we're onboarding these assets to automate data So you don't have 10-finger automation in the middle, because 10-finger automation is how you collect data and insert it into an Excel spreadsheet. We're now automating that, inserting that, and with that, you get better calculation. I'll give an example. We have a very large client. They do a carry calculation on 600 funds every quarter. That's done in Excel, and last year they had 40% turnover in that business unit. I don't know any of you who've ever taken over an Excel model from somebody else, and then you've tried to run that, and you spend a week trying to figure out why I-13 was divided by J-42, right? And it's horrific. And this is one of the largest asset management firms in the world, and they're not, they like the efficiency, they like the automation. What they really like is the de-risking. Does that make sense? And so we're bringing these guys on. It's changing the risk parameter. And as they do so, and that one client, when we signed them up as a client, we were ready to go, and we said, what blockchains do you want to anchor this data to? They're like, whoa, 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 there's blockchain involved here? And which we thought was a win for us, right? Because we didn't sell blockchain, just like Oracle doesn't sell SQL databases, right? What they sell is enterprise solutions. And we were selling data being delivered real time to a computational instrument or a computational tool that today 98% of our computational tools are legacy systems, but in 5 years, 80% will be smart contracts.
Yeah, and I think when I take all the data that you're building, our role in that model is that if one of you in the room is doing a tokenization project and you want to enrich the data of the asset with a platform like Inveniam or any other, and then we take this asset and we distribute it, our role will be to make sure that the investor who might be seeing the asset somewhere completely different on a completely different platform in another part of the world, when they click to see the data room, we need to go back and make sure that the permission is there for them to see what they see, because there's definitely, it's not just the data, it's about who can see it and when they can see and what they can see. You could have, prospects might see one thing and actual holders of the security might be seeing something else. So all of this integration needs to be done, and that's the infrastructure that we're building together. We have about 3 minutes, and I usually like to take questions. So if there's any question from the audience for Pat or myself, we'd love to answer.
While you walk back to that, I want to comment on that. We have token-based access control. So if you have a token in your wallet, you have a right to see a document, as well as role-based access control, as well as the ability to integrate with Cognito or Zero Auth, so that people who administer digital assets do not need their employees to hold a key, which we don't think the regulators are going to like, right? I mean, you have to actually have the ability to administrate these instruments.
Hello, I'm Katie from Swarm. We're a regulated DeFi platform. Your point about having this huge data source in order to feed through in tokenization, I think there's a real part to play for your company in the whole digitized economy. One of the biggest problems, though, with digitalization is the accreditation piece. So how do you ensure that what's recorded in your database actually exists in the real world? And can you give maybe examples of companies that you're working with that does this accreditation piece for you?
So I will start and you continue. So first of all, I'm talking about the combination of both our platforms. All the investors and all the assets on the platform are onboarded to the system through regulated institutions. So we're not operating like the crypto market where anybody can come in and buy and sell whatever they want and say what they want about the assets and nobody can check them. Here on the platform we're talking about, you will come in, you will see that this is actually represented to you by a certain bank or a credible asset manager. And then when you look at it, you'll actually see that it is tethered to the blockchain, and you will see that the data was verified, when it was verified, and take it from here about how you connect it to the blockchain.
Sure, and Inveniam, just to be clear, Inveniam never has any data in our systems. We are a mechanism by which an asset owner credentials data in their own system so that a third party can trust it in the future. We are using the blockchain to commute trust in the original state of that data. And so I'll use an example. We have a client who is a heavy oil energy generation plant in Egypt. It's one of the largest energy generation plants in Egypt. And a third party came in and invested $38 million into it to reduce the carbon footprint and make it more efficient. They get 55% of all the savings every month. That savings is measured using a 100-foot dipstick in an oil tank. Right? And what happens is somebody from the Ministry of Education takes a picture, somebody from the Ministry of Energy, Ministry of Defense, and then the vendor. They all take a picture of the dipstick. That picture is immediately geolocated, it is stored, and then we run a SHA-256 hash on that picture, and if you change one pixel, we'll immediately know. And then what we do is we stick that in the payload of a block. We then send that picture to Baker Tilly. Baker Tilly validates the reading. They then enter that into our system, which pushes the information to Houlihan Lokey, who then values the contract. That contract value is then connected to a token that MakerDAO in their MIP6 protocol, it is the first infrastructure asset approved by the community of Maker to lend against an asset that you actually measure via a dipstick, right? So we're taking the most analog thing in the world and turning it into something that MakerDAO can lend against. Now, because of some of the challenges inside MakerDAO, even though we were approved by the community, they have not figured out how to produce an indenture that the community agrees upon.
You're getting into the details.
Right, but that's an example of analog data being delivered to inform a digital instrument.
Yeah, so you have third parties that are trusted, that validate multiple of them, and then it goes into a regulated financial institution of the asset, and then a regulated financial institutions of the investor, and all of them are in the loop to make sure that this is not a repeat of what we're seeing in the world of crypto. Okay, I think we're done at this stage. Thank you.
Thank you.